Hey, investors! Ready to dive into the exciting world of IPOs? We're talking about those hot new stocks hitting the market. But before you throw your money at the next big thing, you need to know what you're getting into. In this analysis, we will explore the essential elements that make up a thorough IPO or initial public offering analysis. These elements will help investors evaluate the potential success or risks associated with a company's decision to go public. So, buckle up, because we're going for a wild ride through the essential elements of IPO analysis. First things first, we gotta understand the company itself. What's their story? What do they do? How long have they been around? We need to dig deep and understand their business model, their products, their services, their competitive landscape. Are they disrupting an industry? Are they a big fish in a small pond? Don't just read the headlines, folks. We want game changers, not flash-in-the-pan operations. Even the best surfers need the right wave, and the same goes for companies going public. Is the industry growing like a weed, or is it stuck in the mud? What are the major trends? What's the competitive landscape look like? Remember, a rising tide lifts all boats, but a shrinking market can sink even the most promising ventures. Alright, let's talk numbers. This is where the rubber meets the road, folks. We need to dissect the company's financials. Are they swimming in cash or drowning in debt? We want companies with a proven track record of financial performance. Remember, a strong financial foundation is crucial for any company, especially one going public. Now, let's look at the nitty-gritty of the IPO offering itself. How many shares are they offering? What's the price range? How much money are they looking to raise? And more importantly, what are they going to do with all that cash? We want to see a clear plan for how the company intends to use the proceeds from the IPO. Now this is where things get really interesting. We're talking valuation. Is this IPO priced to make us rich, or are we overpaying for hype? We need to look at those price-to-earnings ratios, price-to-sales ratios, and compare them to industry peers. We want a company with a bright future that's priced fairly. Let's be real, folks. Every investment comes with risks. But with IPOs, those risks can be amplified. We need to identify those potential landmines before they blow up our portfolio. We're talking market risk, competition, operational challenges, and regulatory hurdles. By understanding the potential risks, we can make more informed investment decisions. Behind every successful company is a strong management team, the people calling the shots. We need to scrutinize their experience, their track record, and their vision for the future. Are they seasoned veterans or rookie entrepreneurs? Remember, a company is only as good as its leaders. We want leaders who inspire confidence, not raise red flags. IPOs are all about excitement and momentum. We need to gauge the level of investor interest. Are institutional investors lining up to buy in? Is there a buzz among retail investors? Remember, a hot IPO can generate a lot of hype, but we need to separate the noise from the fundamentals. We want to see strong demand from institutional and retail investors alike. We've talked about the company raising money through the IPO. Now let's see how they plan to spend it. Are they expanding operations, developing new products, paying down debt? Remember, the use of proceeds can tell us a lot about the company's priorities and their growth strategy. After an IPO, there's typically a lockup period, usually 90 to 180 days, where insiders can't sell their shares. This is to prevent a flood of shares hitting the market and tanking the price. We need to be aware of this potential volatility and factor it into our investment strategy. Finally, let's talk about the underwriters. These are the investment banks that help companies go public. They set the price, market the offering, and make sure everything runs smoothly. We want to see reputable underwriters with a strong track record of bringing successful companies to market. So there you have it, folks, a complete guide to mastering IPO analysis. We've covered a lot of ground, from understanding the company and its industry, to dissecting its financials and evaluating its management team. In summary, a comprehensive IPO analysis includes evaluating the company's business model, financials, market conditions, valuation, and risks. For potential investors, a thorough analysis of these elements can provide a clearer picture of what to expect post-IPO and help make informed decisions. Remember, IPOs can be a wild ride, but with the right knowledge and a disciplined approach, you can increase your chances of picking winners and avoiding those dreaded losers.